All right, this is Jeff Macke Live. I'm Spencer Israel. That is Jeff Macke from Macke Portfolio. Mr. Macke, how are we doing today?
We're doing great, man. It's fall. Fall is here, and that means Christmas. That means pumpkin spices in the air. I think it might snow in San Diego. It's 84, so we've got to cool down a little bit. But it could snow. I
Wait,
feel snow in the air.
when's the official first day of fall? Isn't it like this week?
It is right now. It kind of depends on where you live. It's actually the equinox, and
Ah,
so if you have exactly 12 hours of daylight, welcome to fall.
great, excellent. All right, well, you're in a good mood. I'm assuming partly because of fall, partly because just your universe of stocks continues to work. Although we will talk a little bit about some quarters of your world that are not working at the moment. But let's start off with one of your proprietary indexes, the uninstallables index. We were talking about, is there any resistance in retail? And you're saying there's no, well, clearly we're at all-time highs, so no resistance here.
Now, in the stuff that I count as consumer bill, meaning like
Yeah.
Uber. It's that's a name that I'm getting increasingly familiar with. Wink, wink. But that's a company. Like there are cheaper ways to get around. There are cheaper ways to have dinner. There are cheaper ways to do everything that Uber does for you. That stock is making new all-time highs. The consumer just can't be that bad. We're buying
Right.
freaking iPhones in record numbers. Holy crap. Is there anything you need less than a brand new phone? I mean, really, when you get right down to it, it's like, I need more megapixels. Damn it. Damn it. I mean, there is no improvement on any of these things. So if we're ordering kind of these products or watch our Netflix, where I'm giddy about the brand new augmented reality goggles coming from Meta, these are not things that go down. Everyone keeps saying, you don't see these things at a bear market bottom, and because we're getting a little frothy on the stock side. But then again, you don't see companies like this doing particularly well in a true recession. If consumers were half as glum as they tell the pollsters, we'd be in a lot more trouble.
This chart kind of shows that no one is uninstalling or not using the things that you consider true staples, right? These are the modern American staples. Spotify is a staple. Netflix is a staple. I
It
guess
just is.
EA,
41
Take-Two.
million people
Yeah,
watched Canelo Alvarez get his ass kicked by Bud Crawford. Now, those are not household names, not even in their own households in America, but Canelo's huge internationally, 180 countries. It was a top 10 show for that kind of extension. We are not a happy place right now, but at least we have money and we're kind of leaning into that as consumers. I guess for now, everything could change. You always sound like kind of an idiot and a simpleton when you put it in terms like, geez, if people are spending money, then maybe it's not so bad out there. But that is actually how it works.
I mean, sometimes simple is right. So this is the Mackie 30. This is your version of the Dow. These are the 30 most important stocks in your universe. Kind of the same story. No resistance at all-time highs, and that's a story we've been in, right? So I don't. What else is there to say about it?
Right. I mean, you're seeing the strength in Alibaba. But the point of making it, these are not stocks that necessarily I want to own or that I use. I finished Punch Out with Mike Tyson, the real one from Nintendo, but that was 35 odd years ago. So I'm not saying that I'm quick, so I don't use Nintendo, but Nintendo goes into this consumer average because damn it, again, we're looking for stuff that consumers actually use and we'll do less. If Costco's in here, we're going to talk a lot about that. Amazon, but this is supposed to capture kind of collective gains, even when you see a rotation within a group like this. And so Alibaba's having a huge little run here. That hasn't been the case for a while. It's nice to see them break out. It's happens as Costco kind of lags, as Walmart sort of holds in place. But that's fine. That's the way a good index is supposed to work.
Yeah, rotation within the index, right?
Exactly.
I think they
Exactly.
say that rotation is the lifeblood of a bull market. That being said, it's not all sunshine and roses everywhere you look. If we're looking for resistance, look no further than denim. What's going on
Denim is
here?
making a triple Nate Bargatze. As you can see, the popular comedian and Emmy host there. That's one top from 5 years ago, another top from last year, and we need to break through. Like we got to get these kind of the denim play. Denim never really has as long a run as you would think. I'm not one to flip flop trends. It's going to ride through the holidays just fine, but the stocks are a little bit tired. Now, you'd expect them to be tired, especially American Eagle. We're all a little tired of Sydney Sweeney, and much more so Travis Kelce, who looks absolutely washed and horrible. That's maybe another podcast that we could do. I hear Taylor's writing a song about dating a kicker because she wants to date a better player. But all that being said, it's for whatever reason, Denham's kind of, we need another surge here to see what's happening. So we're getting some tired trends and stuff that we saw before. The next one's more concerning, though. If you punch down to the next chart, and these are kind of the tariff-proof companies. These are Walmart, Costco, Amazon, and TJ Maxx. These are companies that all kind of win in one way or another from a lot of what was going on with the tariffs. Now, it's kind of, they just aren't making new highs. Costco's weak. They're going into earnings tomorrow. And it doesn't look great. Now, it doesn't look like a shambling disaster, but these companies have just done a lot of pausing lately after a much well-earned, they're resting. They're resting their eyes.
Costco especially, I think, earned a breather, right? So this is a 52-week chart we're looking at. Is that right? So
yep.
The year that Costco had the first half of this year, doesn't make moves like that, I feel like, all that often.
And we got some charts that are coming up later. It's just because we're getting more into the earnings, but this is what happens. It's I'm long Costco on my personal account. It's not a name you would buy tomorrow, right? And you're kind of trapped. But it's like, if this goes down to 100 points, what am I going to do? Well, I'll probably just swear a little bit and my life won't change even a little bit. Like, not even kind of, because of course you're just going to stay long. It's like, well, I was a dumbass to put it in a taxable account. I both don't own enough and I own way too much. Just simultaneously. It's like, if I'm going to be handcuffed by a stock, I should own a lot more, because the only reason I'm long is because it's tripled since I bought it. So you sort of just go into earnings with that dead cat stare where you're just so hoping for the best. But either way, it's not really going to change my opinion. But it's worth noting that, these companies are flagging at 50 times earnings. I love to talk my book. It's my favorite book to talk. But, it's hard to make a good faith argument for it.
All right. Well, since we're on the topic of Costco, they do report Thursday this week after the close. They're one of the major off cycle reports. So the stock was on a huge run, been consolidating for a little bit now. What is your take on the business, though?
The business is amazing. I mean, it's having a moment, and retail kind of trends come and go. We talked about denim before. Costco is not a specialty play. It's not going to get Lulu'd, which got Gapped, which got Guess, which got Abercrombie. All these names, they get too hot, too close to the sun. They go Icarus and they crash horribly into the ground, and we make fables about them. But Costco is not like that. It's one of the all-time stocks, like Amazon, Walmart, Costco. These companies kind of double in a half, and then they just park it for a while. It's trading at 50 times forward earnings. It's earned a rest. But, there's nothing wrong with that business. You look at that chart, what are you going to do with that? Volatility is the options market's pricing in a 3% move. And
that's it.
That's it. There should 3%? Be a way to make money, but it's like, that'd be kind of a big move. You're not going to change a lot of minds with Costco. It's not going to sneak up on anybody tonight, since they're one of the last retailers that report same store sales every month. We already know there's no mystery here. Trump, it's the option on the books is to go to 6-month reporting seasons. Costco reports every month. They tell you what's going on. They're like, our sales are X, and things are going pretty well. We saw strength in this. They've got no problem. It takes them 5 minutes. It's one of my favorite calls in retail. It's just like he's doing it on a voicemail machine. And, so Costco's already disclosed a lot of the meat of this. They make most of their money on memberships. The two things that you want to watch on the earnings, though, are going to be if they talk about inflation. Costco doesn't make any money on the actual store, Spencer. They make the money on the memberships. The memberships are where they make their cash. That makes them a really honest broker when it comes to telling you, okay, what's really happening in inflation. For Walmart, they're not going to come out and say, Yeah, we kind of had to eat some of the tariffs on T-shirts, so we just raised the prices of grapes by 3 cents, and no one really notices grapes. Like they're not going to tell you that. That's a strategic advantage for Costco. They don't really care. They lose money on the $1.50 hot dogs. They make about 3% on all the products they sell, and they make a just dump truck full of money on selling memberships to guys like you and me, because we love to go to Costco and then come out and say, my God, I spent $900 and I just went in for like ramen noodles. It's a fun social thing to do. I bought a sauna. It's people just it's that kind of role right now. So there's not much they can say to the upside or the downside, but they can really tell you about tariffs, and they can tell you about the consumers. If Costco consumers are getting hammered right now, if they're slowing down, that'll be a huge red flag. I don't expect it. I totally don't expect it. But that will be that kind of consumer weakness, to the extent we're seeing any at all, will have migrated upwards a little bit to slightly higher income customers and Costco people who are essentially, let's face it, shopping for fun.
Dude, Costco should sell like experiences, right? Like
they kind of are, if you think about it. I mean, it's
well, yeah, kind of. But it's every man for himself. They should sell like group tours, right? Group shopping excursions. You go as
honestly, guy. It's very. Costco rolled up with a San Diego company, and the guy came in and talked to my kid's high school class, and my son came out and he just was like, "This guy's my new rock star." And I'm like, that 70-year-old rich guy who just kind of waddled into class. He's like, yeah, so we built a club store. We charge nothing for the product, but we get you on the memberships. And every high school kid in the place walked out like, you're a king to me. It's amazing. It's just a great business idea. And as like to your point that we talked about before, that's a 5-year chart. Tremendous run. We've seen two basically kind of doubles in the last 5 years, and then it chills. So they've earned the rest. Is Costco going to break out? I doubt it breaks down here. I would be really surprised, and it would bode ill for America, indeed the world, if we broke down tonight, but that's not going to happen.
Yeah. And these are the estimates, right?
Yep. And the one real wild card in there is going to be, and again, like this is what really good retailers look like. 8% comps. No one's talking about 8% comps. That's incredible. And so you divide that, you count inflation, you cut it up any way you want to, and come on, you're just whining if you say this is a bad number. The only wild card is going to be membership retention. They raised the price of memberships. That should be pretty heavy to the bottom line. There's absolutely zero evidence that people are cutting their Costco memberships, but maybe weirder things have happened. And if that happened to you and I, we'd probably not sell any shares or buy any shares at all. We would just let it happen.
It was their first membership increase in like 6 years, right?
Yeah.
I think 2017 was the last membership hike before this. So
forever.
They're probably due. They're probably due.
They're just a legendary business. Yeah. They're awesome.
Yeah. Elsewhere, on the earnings front tonight, Stitch Fix. This is a name that is, I guess you could say, I'm trying to think of the right phrasing. In the crosshairs, it was in a huge. It was a COVID darling. It was in a massive drawdown. I know you loved it for a while. Do you still love it?
I do. It's love is strong. I don't apply it to many stocks. I like it. I like it a lot. We're dating. It's non-committal, but we respect one another enough to be honest with each other. And it's an open kind of. But so that's how I feel. But here's the point on it. I've got a thing for these companies that were made under ZERP. Spencer, Peloton's another one. Super loyal customers that just won't quit. Once you get them, they just won't quit. And now that market size is so much smaller than it was during COVID.
Right.
But the companies were made when effectively you could borrow money for nothing. And so you could just make a Stitch Fix or a Peloton or these membership companies. And you pay nothing to borrow the funding operations. You lose cash. You don't really care because you're signing people up fast. That all peaked in COVID. If you pull the next chart, you can see this Stitch Fix trades for about $5.50. It peaked at $113 a share. So as you can see, there's not a lot of resistance between here and 113. It's priced to move, and the longer the base, the higher in space, and that's one hell of a base relative to the entire time frame of Stitch Fix. But the reason I like the company is these memberships, these kind of subscription as a service type companies. No one's coming after them anymore. you remember like in connected fitness space, especially, but also in what Stitch Fix does, which is just kind of box memberships for products. There were a zillion and five of these startups. Remember, it's the tonal, there were crew machines, there were all kinds of different connected fitness things. Those don't exist anymore. Just like that, there's nothing coming after Stitch Fix right now. So the question becomes, are they going out of business or can they turn profitable at some point? And, Stitch Fix has done really well at just kind of stopping the bleeding. And that means that the shrinking asset that's going to make money, that's why the stock is doing well. It's up 40%, give or take, for the year. So do I like Stitch Fix? Well, yeah, I love them quite a bit. Maybe 40% in 6 months, and I'm going to love you too, Spencer. But do I think it can go higher? Well, they're going to need to stop shrinking. You can get pretty far by dying slower. You can go really far if you're actually going to live, and that's where they are now.
So this was at its peak. This was a $11 billion company. Today it is $700 million.
Yeah.
You're saying, okay, this is probably not an $11 billion company. It's never going to be again. However, maybe it's a $2 billion company, right? That would be more than a double from here, right? Maybe
it's the kind of cornerstone of both the companies I've talked about and these companies in general, these sort of dying brands, are what's your core customer look like really? It's that 113 reflects a world where we're all locked down and we thought, in the future, people are just only going to shop with boxes that get delivered monthly.
Right.
And people are only going to work out in their Peloton nook. Clearly not the case. And price adjustment had to be done and the stocks fell 95%. Or in the case of Stitch Fix, almost to zero. But the hard part was unwinding the idea that they were going to grow. They had to change their operations. And then kind of once you stop the bleeding, you got to figure out what kind of viable company this is. Now, there's two ways to do it. One is you slowly lose members, and that's fine. You still can make a lot of cash if you figure out how to go cash flow positive. Both these companies have done that. So for all the talk of oh, it's a bubble, oh, the momentum stocks are going crazy, yeah, we've seen big moves in Peloton and Stitch Fix and Real and the like, but they've also done the heavy lifting on proving that they deserve to exist as corporations. There's a 6-day short base on Stitch Fix, which is just a lot of people betting that effectively this company goes to zero. I get that it's 700 million, and that seems like a lot. It's 0.5 times sales, and if they're profitable and they manage not to just be a shrinking asset, the stock is going much higher. I don't know if it happens tonight. I doubt it happens tonight. It's obviously a long shot it happens tonight, but I think it's going to happen. And that is, I think they're going to switch to a slow revenue growth type of model, and they're going to be able to kind of generate more profits out of the same business model. At that point, it's a steal for private equity at like $2 billion easily.
Let's not ignore the fact that this stock is up 27% year to date, which is coincidentally double the S&P 500. So, just saying. It's had a good run. It's had a good year.
It has had a good year. You know what? Yeah. But that doesn't make me like it less, Spencer. Yeah. I mean, I'm not going to dump it because you won. Because oh boy, it's and really it's management of the bottom line is they've got a plan, and as long as you tell Wall Street what you're going to do and then you actually do it. It's amazing the way analysts love that. It's like, hey, thanks for not making me look like a huge ass in front of every single customer we have and my bosses by actually hitting the estimates that you provided and allowing me to kind of release that as research. Stitch Fix has been able to do that. And right now they're promising growth. The street doesn't believe them. It's not going to take much, man. It's not going to take much.
All right. Costco, huge tanker. Should be fine, right? The company is a beast.
Again, we heard from them 3 weeks ago. So they should be fine.
Stitch Fix may be like a tugboat, but a tugboat may be heading in the right direction.
Not going to zero. So right. Could they go down 25%? Oh my God, yes. Their options market is 17% move. And honestly,
that's why I said only was the options market on the Costco thing, not 3%, right? What was it? You said
3%. Yeah.
3%. I mean, 3% on a $900 stock is still, still decent.
Pull up the 1 year Stitch Fix again, though. Pull up the 1 year of that.
Yeah.
It's up one. See that little bump where I've got the options implying
17%.
70%? Look at that's last December. That little spike right between my snarky comment. That the stock went up 50% in one day after they released earnings in December. It went down 30% the next day. The net move over the course of those 2 days after they reported earnings was 5 cents. It was 1%. It was over nothing. It's a bumpy stock, Spencer. It's a I mean, just buckle up. Truthfully though, like it's. I think the company's going to win. I think there are a select few of these companies, and you're seeing it with Real this year, that are COVID babies. They're got the scarlet letter on them, and they always will. But you know what? They deserve to exist. And if they've lasted as long as it's been since COVID, that's long enough. I mean, they're going to start getting taken out. They're going to start getting bought for a premium. It's an investment thesis. That's what we do.
All right. I'm seeing a short percent of 12.5% of the float is short. So not egregious, but not nothing either.
Not egregious, but enough to smell the glove if
right.
All
right. If you are a member of the Macke portfolio, you'll be getting his report cards, I'm sure, tonight/tomorrow morning for Stitch Fix and Thursday/Friday for Costco. And that's it. So, Jeff, we'll see you next week. I imagine there's more earnings reports coming because it never seems to stop with your universe. So,
Carnival Cruises.
Oh, we're coming back around to Carnival already.
We're coming to Carnival. It's on Monday. Have you ever been more excited? It's holy cow. It's going to be glorious. It's going to be absolutely. That's a weird looking chart. We'll see how Carnival does, but
you should all find a group of stocks to love as much as Jeff Macke loves cruises, because
everyone's going to cruise. You'll be on a cruise someday and you'll be like, who was it that told me about this 25 years ago? Yeah, it'll be me, Spencer. I'm that man.
Thanks, Jeff. See you next time.
Absolutely.